All right, let's talk about the psychology side of trading, the fear and the greed, the FOMO and the YOLO. So if you're getting caught up in your emotions, you're having trouble cutting off losers, you're having trouble taking profit, you're battling psychology, you're battling the emotion, you need to realize one thing, and it's something that a lot of traders have a hard time realizing, that there are only so many good setups per day. A lot of times, what I have found that traders struggle with the most is taking the good setups and avoiding the bad setups. And when I say that, it's easier said than done, because what happens is you have a setup, let's say like yesterday, 15-minute range, you got the 9:30 candle, the opening range, we double topped up there. So we got the 15-minute range, you identify that, you have the strategy, you've watched the course, and now you're ready to execute, right? The problem is fear, the fear. So you see the setup and you're like, okay, I don't know if I'm going to enter the trade because maybe it's going to pop back up and stop me out. And then what happens? It goes straight down. You can see it breaks the downside and you keep watching it. You're like, okay, I'm going to wait. I'm going to wait. You know, and you're like, I'm going to wait. And then before you know it, it goes from 540 down to the 440s. And at this point, you're like, well, it's just going to keep going lower. So now you've convinced yourself to take a trade that is not part of the setup. The setup played out perfectly. You had the 15-minute range. You saw the move happening, but you don't take the trade. What do? You end up FOMOing into the bottom here. You end up shorting down here. And before you know it, it squeezes back up and stops you out. So now you've gotten stopped out at the bottom. Your emotions are running wild, and you're thinking to yourself like, well, you know, now it's going to go back up. So like it's got to go back up now that it's stopped me out, right? It's going to go back up. Now the fear and the greed, the emotion is kicking in. You've already got stopped out because you chased this move down. You didn't take the actual setup you're supposed to. And guess what happens? It pushes back up here. And what do? You end up getting long here thinking it's going to break back to the upside. So now what is happening is you're basically on the other side of the move. Whereas you should have shorted here, you end up shorting here. You should have shorted here, you end up buying here. So instead of shorting at the bottom, you should be shorting for the breakdown. And instead of buying at the top here, you should be what? Identifying that there's that 15-minute range there and there's that move down. But again, it goes back to patience. It goes back to understanding that there are only going to be so many good setups per day. And that also tells you that if the market is not giving you good setups and it's not just like, you know, really paying the bills, then it's time to sit. It's time to wait. Because when the market is moving, you're going to get a lot of great setups, right? The day before here on Thursday, we had a lot of great setups. The market was moving beautifully. We broke to the downside. We're moving down. We get another break to the downside. But this is few and far between. The market is only going to move like this very, very seldomly. Very, you know, it's not consistently giving you these big, beautiful trend days. It's just kind of how it is. You're going to get majority of the days are going to be choppy. The majority of the days are going to give you very limited setups, and you've got to be able to execute those setups when they come. The fear that you are going to get stopped out, the fear that you're afraid of losing will actually end up making you lose more, because instead of entering a good setup, what do? You end up waiting. You end up sitting there watching the setup fold, you know, watching it go lower and lower. And before you know it, you end up entering the trade at the worst possible spot, and the market then does exactly what you thought it would do. A lot of times people love to try to pick the bottom. They try to figure out like, okay, I think this is going to bounce here and it's going to go back up. Whereas you see, bigger time frames. Look at that thing. It was just red, and really no opportunity to do much. This is actually a different day, but you can see still red. Focus on, number one, the idea that if you don't take a trade setup, well, that means you're not going to take a trade until there's another setup. That makes sense, right? If I know that there's the 15-minute break strategy, we have that strategy, we got our 15-minute opening candle right there. If I know that's my strategy, well, then I've got to take this trade. I've just got to take it, right? I just got to take it, because if I don't take it, what's going to happen? I'm going to end up trading it later. I'm going to end up entering at the wrong time. And as you can see, the 15-minute range right here from the 19,500s down to the 320s. So if I don't take this trade right here, well, guess what? I'm not going to get short, just right here randomly, because look what happens. The market's going to flag, going to consolidate, and then it's going to expand. It's going to flag, consolidate, then expand. So if you're entering inside of areas that are not a part of the plan, if you're entering in those expansion zones when we're, making that big move down, if you're trying to buy the dip because you think it's going to just go back up, well, look, it goes lower and lower. So you have to be very, very conscious of the fact that if you don't take the setup that you identify because you have too much fear, you're afraid, or whatever it is, then you can't take just a random trade. If the setup that was supposed to be good works out and is beautiful, well, that means it worked out, right? Like you missed it. Maybe you didn't get the right entry. You missed out on the entry. That's totally fine. So at that point, it's just a waiting game and waiting for the next opportunity, another opportunity to get short. If you miss the 15-minute range, it starts moving down. Oh, it's moving down. It hits the pivot point there. You look for another setup. You don't just magically try to trade in between this move. You wait for another good move, and then you take that trade. And I know, I'm sitting here preaching that. I have that biggest problem. That's one of my biggest problems, waiting for the setup to unfold, being patient, looking for those bear flags, looking for the setups, and not just taking any type of random trade that I see. A lot of times, it's very easy to just enter a trade, right? You just press the button, you get into the trade, and you're like, whoa, okay. And then all of a sudden, it blows up in your face. It doesn't work out, and you end up losing. And then you blame it on the strategy. You blame it on yourself or whatever. And that's just the FOMO. That's just the emotion getting to you. It's getting you back into a trade that you shouldn't be in. And it hurts. It does hurt, because that's when tilt comes in. That's when you start doubling down. That's when you keep holding your losers. I think you've really just got to have extreme amount of patience. And I speak from experience. All of, my worst days, my biggest losses came from just not being patient, not knowing that I'm basically forcing a trade and just emotionally going on tilt and just trying to fight the trend, trying to pick the bottom, trying to pick the top, trying to basically do anything other than wait for a good setup. And sometimes, guys, look at this. Like, this is on Friday. There's going to be days where the market goes sideways, right? Look at this channel here. Market's just going sideways. Pretty much, after the morning move, it just goes sideways. So again, it goes back to the idea that you got to kind of look at the chart. You got to have your strategy. You got to have your plan. I don't think there's any value to trying to trade all day long. I really don't think there's any value to that. I think your best bet is to focus on that first few hours, make your money, walk away, have your loss limit for the day, have your strategy, have your plan, have all that laid out, because that is what we're building. We're building that foundation so that we're able to control our emotions, because we're like, hey, just because I have FOMO to enter a trade right now doesn't mean I'm going to enter a trade. Because why? Because my setup isn't there. I don't see a setup. I don't have the risk reward. Whatever it is, you need to be creating reasons to not enter a trade. I think that's really like the best psychological advice I could give a trader, is to create reasons to not enter a trade until you have reasons to enter a trade. Be like, oh, I'm not gonna do anything right here, right? I'm not gonna short inside of here yet, because I know there's that 15-minute opening range. And I also know that we bounce there at that level as well. So until we get below that range, that's when I will look to take a trade. And I don't want to say it's that simple, but again, the biggest problem that you're going to have as a trader is being able to be patient and waiting for the move. Also, going back to the idea that you have to lose, right? You've got to take losses. It's part of trading. The biggest problem when you don't take a loss the right way, when you let your losses grow and grow and grow, is it psychologically is going to create more fear, because the next trade you take, you're like, oh man, I just lost $1,000 on the last trade. What am I going to do on this trade? And it creates this emotion that you're now battling. So if you don't stop out, let's say your normal stop loss is $200. You're risking $200, and then you take a $1,000 loser. That's going to emotionally really mess you up. So you want to avoid that. You want to avoid, having those large losers grow and grow and grow. It happens. You're going to have some big losers sometimes, but trying to avoid that regularly is really going to help your psyche and help your overall emotion when it comes to having that fear of entering a trade. Because if I enter a trade, I'm like, okay, I'm going to enter this trade. I have my stop loss. I have my plan. I've kind of, made sure going into the trade that I'm checking off all the boxes. What's the trend doing? Is there a setup? Where's the VWAP at? Where's the pivot points? What is going on? The more questions you can ask and really build like a thesis on why you believe this is going to happen and play out, the better. Because sometimes it just takes a little bit of patience of asking yourself before you enter a trade, like, wait, hold on a second. Let me look at this. Let me look. All right, let me look at the bigger picture. What do we got there? Is there any support? Just taking a little bit of a breather, taking a breath, right? Being like, okay, I'm going to wait. I'm going to look around here. Okay, let me see. If I go back on the hourly chart, oh, there's a little bit of support right there. Okay, and I see that. So the more patience I can have, the more questions I can answer, the better. And again, going back to that idea that not every single moment of the day is going to be a good time to trade. If you can't trade early in the morning, when the market opens, the afternoon, 3 o'clock to 4 o'clock is always a great time. At nighttime, 3 a.m. with the London Open, there are hot spots when there's going to be more volume, there's going to be more action. So you really want to focus on that time frame. You want to focus on having just kind of a set plan. The more that you can refine your strategy, the simpler it can be, the more kind of like easier you can walk through it, the more you can talk yourself through it, the better, because that's going to allow you to execute a trade. And if you're having problems, like if you got a lot of fear, you're afraid of entering a trade because you're like just afraid of losing, there's no problem, using a micro contract. Trade a micro, trade one micro, risk a very small amount of money, risk $20, $30, whatever it is, risk a small amount of money and start building on that. Trade one micro, build another micro. You can trade 3 micros and start building up till you get to a point where you're feeling good about entering a trade, figuring out the sizing that when you enter a trade, do you have any emotional reaction? Do you enter a trade and all of a sudden you're like, oh God, do you start praying? If the first thing you do when you enter a trade is start praying, then you've got a problem. There should be no praying. There should be no hoping. I see a lot of people in the chat on the live streams talking about they entered a trade and they're hoping it goes back to their entry, because if it goes back to their entry, they're going to get out. But the problem with futures is it can just keep going lower and lower and lower. Before you know it, it blows up your account and you have a terrible day. So please, please, please follow the plan, follow the strategy. Remember, guys, this is not going to be an overnight, easy, exciting thing. Trading is going to fight you. It's going to be a battle. You're going to have to kind of do a lot of introspective thinking and kind of figuring out like what works best for you, kind of figure out your own little edge in the market. Find a strategy, keep refining it, keep making it simpler and simpler. Figure out what works. Once it starts to work, once you start to really get some, idea of what is working, what's not working, then you can kind of tweak things. You can move things, move your stop a little differently, move your targets a little differently, and then kind of build upon that. But until you find that consistency in terms of sizing, in terms of your entries, your exits, and figuring all that out, you won't really be able to build and really be able to start to grow until you really get back to the basics and focus on just controlling that fear, controlling that emotion, and thinking about trading very simply as, if I enter a trade, there is a chance I might lose. If I enter a trade, there is a chance that I might win. But I don't control the market. I don't know exactly what's going to happen next. If I did, I would be a billionaire, but I'm not. So at the end of the day, the biggest thing to remember is that you're simply here riding the trend. You're simply here taking a setup based on probabilities, statistics, that if a bear flag breaks the downside, there's a normal reaction that we move lower and those things. So we're identifying these patterns to give us a small edge in the market. But again, every trader is going to have losses. Every trader is going to have to kind of go through that battle of fear and greed. And greed is just as bad as the fear. If you have a target where you're like, hey, if I can make $200 a day and then I can walk away, that's a great target. If you get to that point and then you're like, I'm going to get greedy and trade more and trade more and trade more and try to go for a $10,000 profit day. Well, hey, if that's part of your strategy, you're trying to get to that point where you want $10,000 a day, that's fine. But if your normal day is 200 and you get there and there's no more good setups, hey, nothing wrong with walking away. You know, make your money, walk away. A lot of people that start trading, they're just trying to look for some supplemental income, but they end up really trying to turn trading into this thing where it's like, I'm going to pay all my bills. I'm going to pay off my house. I'm going to make $1 billion. But, you know, hey, you started out with just the idea of like, if you could make $500 a week, you'd be happy. And now you're making $500 a week, but now you're getting greedy. Now you're trying to make $10,000 or $100,000, whatever it is. That fear, that greed, it's a constant battle. But the more and more that you can kind of really, you know, tweak and fine tune your strategy, the more and more you can focus on really kind of dialing everything in, the more that you're going to remove a lot of that emotion. If you don't have a plan, you don't have a strategy, you don't enter a trade with an actual idea of what you're going to do, then that's when the emotion takes over and you start just holding and hoping and praying. Because if you enter a trade and you're like, hey, I've got my stop loss set. You know, if I enter this trade here, let's say I enter this trade at the 15-minute opening range, the breakdown. Okay, I'm entering short here. Well, if it starts to pop back up, I'm like, well, if we get above the high of this candle, it's not good for me. There's a good chance maybe we push back up. So I've got to, if I'm entering here at the 42s, I'm like, okay, you know, my stop is there. I can't risk any more than that because it might invalidate, and then this would happen where we put in a higher low and we start to move back up. So I want to make sure that if I have a stop, follow the plan. Follow the plan, follow your stop, remove the emotion. The fear and the greed comes in when you don't have a plan. If you don't have a plan, you don't have a setup, that's when the fear and the greed takes over because you're just willy-nilly going all crazy, trying to trade anything and everything. So look for your setup. If it ain't there, you don't have a setup, then don't take a trade. Just taking a trade out of pure boredom or FOMO or greed or whatever emotion is what is going to end up blowing up your account. If you have a strategy and your win-loss ratio is 60%, 50%, 30%, whatever it is, but your overall risk-reward is in line with that strategy, then you're okay. You know, like, hey, if I take a $200 loss, no big deal, because guess what? If I keep following my strategy and I have a $600 winner, a $200 winner coming up, well, it's all going to just like kind of zero out and we're going to be in the green. But if you let those big losers grow and grow and grow, before you know it, you're going to blow up the account. You're going to blow up your psyche. You're going to create more fear. You're going to create more emotion. And I know it's hard. It really is, to be honest. Like, it's hard to think about it that way and to really be focused always. That's why I think it's really good as a trader to kind of have a time set where you're like, I'm going to trade the first 2 hours and then I'm going to walk away. I don't care what happens the rest of the day. I'm going to trade my setup, the 15-minute opening range, whatever it is. I'm going to trade that and then I'm going to get out of there and I'm going to run away. Make money, get out. Make money, get out. Make money, get out. Just kind of get into that mindset. It's not a mindset of like, I'm going to make $1 million a day. I'm going to be like, how much am I willing to lose today? Like, what's the maximum that I'm going to lose today? And everything after that, everything in profit is just the icing on the cake. If I can avoid losing and I can make some profit, well, I'm doing something right. So avoid those big blowups by just following the plan, getting stopped out, rewarding yourself. Be like, hey, I got stopped out. And now I'm rewarding myself by waiting, being patient, take a little break, maybe drink some water, whatever it is. Just slow it down. Slow it down. The worst thing you could do when you're in that kind of FOMO, greed, or hope and praying stage, you know, is adding to a loser, is trying to reverse a trade right away, trying to keep just like, oh, I'm going to get short because now the market's selling down. Well, it don't work like that. Trade the setup, focus on the plan, and then execute. execute, execute. The more you do this, the more you build up that muscle memory, the overall like mental memory as well. The more that you do that, the easier it's going to get to keep executing over and over. But again, if you're not consistent and kind of following the plan, then how do you really build on that? Like, how do you really know what you're doing if all you're ever doing is just entering a trade because you think it's going to go up or you think it's going to go down, and you're not really following any type of setup, and you're not really giving yourself a fair chance, a fair attempt, because it's going to be too hard. You're going to blow up. Your mental, it's bad. Stay out of the chop. Follow the plan. If it ain't looking good, it ain't looking good. Like, you don't need to force a trade just to make money. Sometimes the best thing to do is just to not take a trade at all. Maybe just walk away. That's one thing to realize as well. Just because the market's open does not mean you need to trade.